Thank you all for taking part in this marketing presentation. Please jot some ideas if you would. Our presentation is going to be focused on five main parts. We have the situational analysis, we have the SWOT analysis, we have marketing objective followed by targeting and positioning strategy, and we have the marketing mix strategy. Situational analysis. The company was able to increase its profits by 11.5% despite the pandemic, while increasing its workforce by 2%. Customers are responding positively to sustainable investing. From the external environment, we have factors such as increasing pressure from government authorities trying to regulate the sector, especially with the introduction of the iShares. There's trade tensions leading to sanctions, and there's fierce competition from small technological firms as well as climate change controversies. Non-traditional financial services companies such as technology firms are making their way into the market. There's a high bargaining power of consumers. Partnerships such as that with BNY Mellon and Microsoft Corp are strengthening the company's position in the supply chain by integrating data insights, improving servicing, and extending Aladdin's reach on cloud platforms such as Azure. The global asset under management industry grew about 17% in 2020 and is forecasted to grow an average of 5.6% up till 2025. BlackRock alone controls about 7% of the entire market, while the top 20 companies control more than 43% of the entire market share. SWOT analysis. Strengths. The company boasts of a huge free cash flow which it could use for investments, its global presence, an innovative culture, a strong brand equity, and a large asset base. Now on to some weaknesses. The company relies on its Aladdin platform which handles its risk management and operating activities. The iShares is getting hit with a lot of lawsuits and criticisms. The company has a somewhat rigid structure, making expansion difficult, especially into international markets. The company's investment in R&D is low compared to key competitors in the market. Speaking of opportunities, there's a growing retirement sector which is mostly linked to aging population in advanced economies such as Japan. There's a rising need for private capital in emerging economies around the globe. Due to globalization, we have reductions in freight and shipping costs. There are new varieties in alternative investments and portfolios, and the internet age has brought enormous opportunities in terms of reach. Speaking of threats, we do have increasing pressure for regulation of activities, both from the central and local authorities. We do have a lot of social activism going on for environmental and social related causes. The downturn of the economy due to COVID-19, we have a limitation from lower quality and less costly products from competitors, especially new entrants into the market. And we do have other mega trends such as aging population, the depletion of raw materials, and racial wealth gaps that poses a threat. Now let's look at some suggestions for market growth as well as analyze the current market segment. The company has good access to information and leading technology. It could use this to efficiently launch and develop new products and services. The company could pursue a market penetration strategy by introducing more value-add options, streamlining its products and services to reduce costs for customers, as well as providing free consultations and simulations. Thanks to its innovative culture and strong brand equity, including its partnerships around the globe, the company could leverage these for strategic acquisitions while increasing its alternative investing. Segment analysis. The industry is fast-paced with a lot of fierce competition, and increasing regulations. The ages 24 to 50 happens to be the most active. Customers' needs are fast changing, with more people seeking for responsible and sustainable ways of investing. Considering factors as climate change, early planning for retirement, and the spreading of risk via alternatives, including illiquid options. For our fourth topic, let's look at targeting and positioning strategy for BlackRock. The company currently targets three main regions: the Americas, Europe, Middle East and Africa, and the Asia Pacific regions. Even though BlackRock's products and services are more suited for old or middle to old age people, young adults looking to make additional income, secure money for the long term, or even plan for retirement are showing interest in these products. BlackRock is known for leading the way with the iShares. It simplifies investing by making it convenient for anyone around the world to be able to invest at low cost. Since its inception, the iShares has helped people save over 400 million. BlackRock is also known for launching new relevant products such as the Aladdin Climate and for its strong performance on its returns. Some recommendations: BlackRock should consolidate its position as a leader in the sector with a focus on low-cost strategies. It should try accelerating its investment in iShares to lead the sector as a whole portfolio solution to clients, including illiquid options and alternatives. The company should advance its position as a global leader in sustainable investing, and it should try as much as possible to build comprehensive relationships with its clients and the community, including advocating for causes such as racial and wealth equality, as well as social causes such as support for the LGBT community. On to the final part of our presentation, the marketing mix of product, price, place, and promotion. Product. So we have the current position and we have recommendations. Trends such as climate change, the pandemic, racial wealth gaps are causing the need for more diverse, stable, and resilient portfolios that reduces risk. Recommendations: diversifying away from the traditional 60-40 portfolios to more diverse alternatives such as illiquid options and sustainable investing. Price. BlackRock relies on channel members for sales. As such, it adds on to the price that is borne by customers. Prices are fairly inelastic amongst the top players. Recommendations: review the current price catalog against key competitors, introduce more discount pricing, especially in emerging markets and across retirement portfolios. Place. The company uses more than 500 retailers and wholesalers, relies on a mix of online and offline stores for sales. Recommendations: setting up company-operated branches in saturated markets such as the Americas, redesign its website to be more interactive, and engage clients and the community more on social platforms such as Facebook, Twitter, and Instagram. Promotion. The company uses a mix of TV and radio ads, short to long, medium length videos on YouTube, LinkedIn, Facebook, and Twitter. The company uses a lot of PR promotion with videos relating to social causes. Recommendations: reorganize its website to include more interactive content and ads, introducing 24/7 live chats and chatbots like most other sites are doing, introduce a more mobile-friendly interface, use influential social media figures and TV stars to send across messages. Key IMC figures. Cost per impression would be a good promotional or a good way to measure the promotional effectiveness in this case. For example, BlackRock's Be a Capitalist and a Crusader campaign cost $5 million and it racked up over 281 million impressions. This gave a cost per impression of $0.018 or 2%. Close competitors get between 1 to 1.6%. So we could say the campaign was a success. In 2020, BlackRock spent over 1.4% of its revenue on promotional efforts. This represents 2.18% of total expenses. For the same period in 2019, the company spent 2.41% on promotional efforts when compared to profits, and it represented 3.91% of total expenses. I would advise the company maintain its promotional costs around 2% of total expenses and focus all its efforts on art related to social causes. Thank you for your time.